Alright, so PRCH Group missed in terms of profitability, although revenue grew in line with what I expected. And it's been an interesting fourth quarter. We saw the snowstorm Elliot blast through basically, and this increased claims with 7 million more from the insurance side, and they took a hit. So it's interesting to see in the CEO summary here in the start that he's excited with a reciprocal exchange to advance our insurance business, and I am excited about the future with expected higher margins and consistent margins with reduced direct exposure to claims and weather events. So reduced exposure to weather events. Yes, indeed, commenting on this, and it would be a good thing as well for the multiple that investors can add to this stock, as more predictable earnings is better for the models that institutions use, and we still see very little institutional buy-in in this stock. And in terms of the share buyback program, we can see that they bought back 2.4 million shares of the 15 million shares that the repurchase plan covered. So interesting, we will see the float continue to reduce in the future. And that being said, it could be good that the stock price continues to hover on the levels that it is doing right now. However, as investors, we of course are always impatient. We want to see big money, fast money. And in this case, I think that the management still, they held to the plan of profitability in the second half of this year. And I think that this could indeed be a catalyst for the stock. So same as always, waiting on this profitability, although I was hoping to see it earlier. Now in this case, well, it's hard to predict bad weather. And I also noticed when I looked at the earnings report that revenue that's not yet realized increased by a lot as well. So we see this typically in insurance businesses when customers have paid the premium, but PRCH Group have not yet delivered the service, then they cannot realize this revenue on the operations side of the income statement here. However, Kathy Wood does this when she makes her special adjustments. So there's one investor that counts deferred revenue. However, in normal cases, we see that this is not counted. So this is also an added bonus once these premiums become realized revenue. And the software side, I'm a bit disappointed in the growth. However, the housing market is not the hottest right now in America, with new listings being lower and new mortgage applications being terribly low. So the macroeconomic environment for PRCH Group right now is not the best. It's a cold winter for them basically, and we need to see a turnaround here in the housing market with more sales, more deals being made, more property inspections being needed to continue to see more use of the software and the ability to market to people interested in moving. That's another segment of their business. So it could be better, it could be worse. Now the fourth quarter is behind us. We've seen the results. We've seen the increased claims from the snowstorm here only being 7 million. Nothing that breaks the banks. They still have a very strong balance sheet in this case, still continuing to repurchase shares, still holding a forecast of profitability in the end of this year. All in all, I will continue to hold my stock here and maybe add a bit to the position going forward once I'm done with some other deals. I first need to close a property deal before I will buy more shares again. But all in all, that's my opinion on this earnings call, and as always, hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.